Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP as well as the vast majority of finance. So let's just dive in and let's start off with this tweet here. And we do see Justin, Treasury Secretary Janet Yellen calls top U.S. financial regulators for an unscheduled meeting today that is closed to the public. Now, this was yesterday. This meeting already happened. But the reason why I'm bringing this up is because I want you guys to get ready for the distractions. We are going to see so much crazy headline articles and news media, reporting on some nonsense out there. Who knows? Could be Trump, it could be this, it could be that. All it is to pull your attention away from the most important thing right now happening in our world of finance, which is bank collapses. These will affect everyday life. It will affect your purchases in grocery stores. It will affect your, credit card usage. It will affect everything. Your utility bills, the cost of living is going to go skyrocketing to, all-time highs where most people cannot even afford to live right now. But guess what? We're going to get hit with headlines and distractions and this and that. And we're already starting to see it, right? Just recently, I announced, or I reported on this announcement that Fed Chair Jerome Powell and Janet Yellen say U.S. banks' capital and liquidity are strong. I want to take you guys to this video here. This is Glenn Beck, and he's talking about these huge distractions and headlines that are, taking your attention away from the massive banking and inflation crisis that's brewing right now. Most people are still, dealing with a lot of issues currently around the cost of living. I just recently talked about this, but listen closely to what Glenn Beck is saying here and understand where we are at currently around the world of finance.
Why are they going after Donald Trump now? Well, there's lots of reasons. But I would like to start with the granddaddy of them all, distraction from the banking crisis. The banking crisis, inflation. By the way, the Fed that told us inflation is just transitory. If they raise the interest rate today, the banks were worried that, we might have a whole bunch of banks go down. Well, they did raise it. You know why? Because they're terrified of the inflation that is coming. They couldn't not raise the rates today because of inflation. What does that tell you? This gives you flashbacks to 2008. You should read on because the next chapter is much worse than 2008.
And that's also another thing that I've been talking about quite a bit on this channel is that what is coming will overshadow 2008. Now listen, full transparency, I was not old enough to experience 2008 financially. But I did see family struggling, see my own family struggle. 2008 was a very rough time for nearly everyone out there. What we are seeing now is going to be 2008, but on a much larger scale.
The banking crisis spreading to Europe. Credit Suisse has been in operation for 166 years. Switzerland's largest bank, UBS, had to do a hasty deal at the very last minute to buy them out, quick, before the markets open. The deal was so last minute and rushed, the New York Times reported, quote, so hastily assembled was the deal that UBS told analysts that they didn't have the time to fully model all of the financial impacts of buying Credit Suisse. Okay. Credit Suisse has had its problems, but Deutsche Bank has been on the edge too. What's going to happen with them? How many banks here are facing this same scenario? This rate going up 0.25 today, is that going to put any of our other banks in line? And by the way, if we bail out all the banks, isn't that nationalizing our banks?
And he does make a good point there. And I reported on it, right? The 0.25 BPS rate hike it constricted banks even more. We're already delaying the inevitable. I'm telling you right now, us bailing out banks, utilizing more printed capital, it's only causing inflation to get worse and worse. In the short term, yeah, sure, inflation might not be as bad as what most people are seeing it as, but guess what? It's coming. And it's going to be a lot worse than what we are seeing even now. And also, he does mention Deutsche Bank, right? Yeah, let's go over here real quick. So here's Justin. Jim Cramer says Deutsche Bank, DB, is very profitable and doing well. Listen close to this clip.
Well, the real problem with Credit Suisse, which is the analog, is they never made any money. Deutsche Bank is actually very profitable. So let's start there. Why bail out a bank that is just a chronic loser versus a bank that's doing well? Well,
yeah, Deutsche Bank, it's very profitable and they're doing very well. Well, guess what? Check this out. Good morning. Deutsche Bank's shares slide. Cost of insuring against its default rises. I mean, look at this. I mean, these are major banks around the world. And we actually have Deutsche Bank stock here, down 35% in the last 51 days. And just recently, on this candle here, well, it's down 16.8%. Yeah, looks very good, right? And also, we just recently seen the German lenders' shares retreated for a third consecutive day and have lost more than a fifth of their value so far this month. Deutsche Bank shares slide 13% after sudden spike in the cost of insuring against its defaults. Interesting. And then also, the FDIC, right? We got confirmation from the Fed and Janet Yellen that, hey, all depositors will be covered, right? This is nonsense. They're telling you all lies. Let's go back over here. Powell claims the FDIC has all the bank deposits covered, but who's insuring the FDIC? They're broke. The Fed will have to bail out the FDIC, print money, and inflate the economy. Now, I don't agree with Peter Schiff on a lot of his things, right? We've talked about it in the past. I'm very bearish on crypto and Bitcoin, all that. But this, I do completely agree, because guess what? We've been reporting on this. In fact, we actually do see over here, the FDIC has already blown out or blown through most of its 128 billion reserves. The debt ceiling prevents expansion of the FDIC. The government will shut down over the debt ceiling right when the banking crisis hits, critically delaying any emergency response. Yeah, honestly, I don't believe that this is going to happen. I do think that they're going to raise the debt ceiling like they have, done in the past, and again, print more debt, because guess what? That's what our country does. We don't solve any problems. It's like they're trying to tape together broken glass. It's not going to work. The entire system is completely broken. It's garbage. And I do completely agree down here, like, what if I told you this is all by design? It is. In my opinion, the world of fiat currency, and the fiat system is done. It's finished. I've questioned on, like, what am I going to sell my crypto into? What am I going to sell it into US dollars? The only way that I would sell it into US dollars if I was using the US dollar to purchase gold. I want to buy physical gold and silver. At least this is currency that is not going to be printed out of complete random error to inflate the system to cover debt that they created themselves. The entire economy is completely broken. And listen closely to what Peter Schiff is actually saying here in terms of the FDIC.
Another ridiculous comment that Powell made. Somebody asked them about these swap programs and what about the risk to the Fed? What happens if one of these banks fails or something? And Powell said, oh, there's no risk to the Fed at all. Well, why is that? Well, because Powell said it's all guaranteed by the FDIC, so nobody has to worry. Oh, it's all guaranteed by the FDIC? They only have $100 billion. You're talking about $18 trillion worth of deposits. The Fed's balance sheet grew by $300 billion in 1 week. The FDIC only has $100 billion. That's triple their entire reserve. God knows how much the balance sheet grew the following week. But to say that they don't have to worry, that the FDIC's got everybody covered? Who's got the FDIC covered? The FDIC is broke. Where is the FDIC going to get the money? From the U.S. government? No, the U.S. government is broke. They're running multi-trillion-dollar deficits. The only entity that could cover the losses at the FDIC is the Fed. So the Fed is going to have to bail out the FDIC. So if Powell says, hey, we're not worried about anything because the FDIC is insuring everything, who does he think is insuring the FDIC? The Fed. Is Powell this clueless that he doesn't even understand this dynamic? Now, maybe he's not worried because he's like, well, we'll just print the money. Who cares? Whatever money we lose, we'll just print it up. Yeah, that's inflation. That's the problem. He's saying he's committed to bringing inflation down to 2%, but then he's also basically committed to open-ended money printing because he's going to backstop the FDIC. He's going to backstop all the banks. You know, one of the reporters asked him, hey, what about all these small banks? Are all their deposits covered? Is the government going to bail out and protect every deposit, even the large ones above 250? And he wouldn't answer the question. He's afraid to answer the question. So what he said was, the banking system is sound. Nobody should worry about the banks. We have the tools to act and protect the depositors if their bank failure is going to harm the economy. So again, there's the if. Well, what if a small bank fails? Is that going to harm the economy? He was almost saying that any bank that fails, regardless of the size, is going to do some harm to the economy. And therefore, the Fed is going to need to bail that bank out and make all the depositors whole because we can't allow any harm to the economy. But he didn't want to come right out and say that.
So yeah, I mean, we're basically at a point in time where we completely see this smokescreen narrative hiding up and covering the fact that, one, we're not going to be able to cover all the depositors. Not unless we raise the debt ceiling, print more money, because the FDIC, well, they're broke. It's as simple as that. And we're starting to see major issues happening right now. I do believe that we're about to see more bank collapses. We just seen this. Most vulnerable banks have lost $1 trillion of deposits according to JPM, with more to come. This is from JP Morgan on March 22nd. And also, we just seen 5 bank failures in less than a month, and now Deutsche Bank, like I said, is wobbling. Probably nothing. Like, we've been watching these bank stocks, and I've been watching these so close. I've been telling you guys to keep a close eye out on these. Like, yeah, sure, some of these are doing very good. Some of them are bouncing back a little bit. But I think that this is just a relief rally in the banking area. I think that the banking industry is about to go bust. I've been talking about this for some time. Like, these banks are extremely over leveraged. There's not enough liquidity in the system. A lot of people have been saying like XRP could 100% solve this. I do believe that on-demand liquidity could solve a lot of the issues. I also think that unlocking those Nasha Vostro accounts, that $27 trillion worth of capital that is locked away. Don't know how much money's there today. We just know that there was 27 trillion. Who knows? Maybe they borrowed from that. Like, it's questionable on where things are headed. But in my opinion, and I've talked about it, I do believe that this is all by design. I believe that they are trying to collapse this old system to usher in this new system. And the biggest problem and the scariest thing around this new system is it going to be CBDCs? Is it going to, take control of everything that we know? Is it going to, take our privacy away? It is questionable on where things are headed. And I cannot tell you guys right now how extremely fortunate we are to understand what's happening, while many, and I would say even most, of the general public is blind because they are following what they're being said. They're being told and fed these lies consistently on a day-to-day basis. Don't worry, depositors will be made whole. Don't worry, it's just 1 or 2 banks. Like, I just talked to somebody. Now, mind you, this is somebody much older than me, somebody who went through 2008, and they said, well, it was just 1 or 2 banks. This is the biggest issue, is that they're being said that, it's just small. It's nothing. We can contain this. This is not a big deal. This is much larger than what they are letting on. 2008 will be a blip compared to what is happening right now. Give it some time. These things take time to truly erupt. But what we are about to see is going to be the biggest, the largest financial collapse in history. And it's because we have over-leveraged debt for so long. Fiat currency has failed. And the US is a perfect example of that. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, set notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or a beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.